You have the dollar reserves dipping as the country settles its debt obligations and tries to defend the peso. Is this a worrying picture?
No, definitely not. And in fact, we're still more than 7 months of import cover for goods. So therefore, this is way more than the 3 months, the benchmark for the thresholds for the amount of reserves a country must retain. So therefore, we are still very, very much above the 3 months, cover for imports in terms of our reserves. So we're very, very far from a worrisome level for our GIR.
But do we also expect that to close out the year at least at some level of growth, considering as well that the peso is already appreciating?
Yes, and in fact, we are still receiving significantly a very strong growth in terms of our OFW remittances, and so therefore we expect that our reserves will slightly grow a little bit better, and therefore we should have grown our GIR at the end of this year.
Okay, given all that, do you also see this trend continuing? I mean, the strong dollar theme already waning. Do you see that happening as we close out the year and even all the way through next year? And how do you see the currency closing out the year?
Well, because of strong remittances from our OFWs and of course from Filipino companies abroad remitting their portions of their earnings to the Philippines, no? So we see this particular trend in terms of the appreciation of our peso. But towards the first quarter next year, so we can see now towards the end of the first quarter, we see a slight trend towards depreciation again, as our OFWs will somehow rest from remitting their dollar remittances and taking a look at how our economy will perform next year.
By depreciation, you mean up to what level, at least for the first quarter of next year?
Well, again, I think there is that ceiling towards becoming a senior citizen by our peso. No? So I think that 58, 59 would be that particular healthy depreciation towards the end of the first quarter.
Okay, but what does that also mean, especially when it comes to inflation? I mean, now we're seeing the peso strengthening. Does that also mean that inflation might actually cool in the near term? Or like what you mentioned, if you are expecting the currency to somehow depreciate again in the first quarter, does this mean that the trend when it comes to price pressures will continue?
Well, there are two things. No, one is on there's a slight there's already a weakening relationship between the exchange rate and the inflation rate. So it's not a one-to-one correspondence in terms of our exchange rate and inflation. Number two, as far as sources of inflation are concerned, one, U.S. inflation is now decelerating. Number two, global oil prices is also decelerating. So therefore, we see a general trend towards deceleration of inflation of global environment, and so therefore we can now project a deceleration in terms of policy hikes as well. So interest rates will no longer be increased as far as these sources are concerned. So therefore the inflation environment will significantly be better towards the first quarter, second quarter of next year, because the sources are now beginning to evaporate as far as inflation is concerned.
But when should we see the deceleration happening? Like what you mentioned, first or second quarter of next year. But when do you see the tipping point happening? Or is that 8% last month already the peak here?
Yeah, I think this year, December, perhaps January might be the extraordinary case, but I think it's already peaked. Of course, barring again another round of very significant events happening with the Ukraine-Russia conflict. No, so but without any significant additional event, we should be on our way back, treading the path of 5% towards the end of the first quarter and very easily on the second quarter.
I want to pick up on what you mentioned. January might probably be an extraordinary case. Why is that?
Well, with what we're seeing in the last few days in terms of Ukraine hitting some targets in Russia, and so this possible escalation again might provide some sources of additional increase in our oil prices. But if that will not feed into oil prices, then this should be good news for all of us, as we will have factored in all of these things, all of the conflict globally, and therefore we're just talking about the natural rate of inflation towards January, February, and March. And so, and when we say natural rate, we're already talking about an inflation going down.